All right, time for the fifth and final real focus. And that is, as you can imagine, job growth percentage. And this is bizarre right now. I have never presented a number anything like this, but obviously, because 2020 was a weird job year and then 2021 was a weird recovery year, job growth right now in the US is pretty messed up, right? So I'm not saying that, well, maybe that's not the right word. Job growth in the US is pretty awesome, but it messes with the real focus system. So this 4% actually have had to divide it into two pieces. So, or maybe three pieces. So what I want you to look for is the city that you're investing in, it should have over 4% annualized job growth. That's 3% for big cities over a million like Los Angeles. And I'm going to show you where to find these numbers. The link is right there on the screen for you. Now the caveat here is actually even more stringent than the others. Only apply this 4% number to the rest of this year, to the first half of 2023, and then drop to 3% for the second half of 2023. Why? Because the market is normalizing. Because as the market normalizes, the numbers fall. If you try 4% in the second half of 2023, you might not find any cities to invest in. Who knows, right? So now let's talk about where to get this data. Well, straightforward. You're going to go to a website, which is in here. There we go. So this is departmentofnumbers.com, a very funny, interesting website called departmentofnumbers.com. This is actually a government website, and they advertised. I guess the government needs money. /employment/metros, right? This is a very boring looking website, but it's absolute gold. It's an amazing website. I look at it all the time. I'm sort of, unhealthily obsessed with looking at the numbers on this page because they're so important. Job growth is the most important real focus and the one that tends to affect your profit the most. So as you look at this, the first thing I would want you to do, and remember, you're going to get this link tomorrow because you're going to get this whole deck. And the Excel spreadsheet also has, this list link in it. So you've got it in the deck, you've got it in the spreadsheet, right? So you don't have to write this link down. Now, 1 year job percent change. This is the one that matters the most. This one actually I don't usually care about, but I'll explain to you why when I look at this. All right, so I click this twice. Once when I click at it, the most crappy cities in America come up. Sorry, but in my list, these are the worst cities in America. To be losing jobs at this point when the US is at 3.5% unemployment, you've got to have really bad prospects. Click again. And some of the most amazing cities in the US come up. The challenge is that recovery from COVID has been uneven. So I'm
Neil,
going to point to some of the.
Please. People are requesting if you could zoom in more, please.
Zoom in. All right, let's do that. Let's zoom in. Boom, boom, boom. How about that? All right.
Thank you.
There we go. Let's do one more. Perfect. So normally this list is very reliable and it'll become reliable again in the next 6 to 9 months. But right now the list is a little bumpy. Why? Because cities recovered from COVID at different times. So we see some cities at the top that we don't normally see. Gambling cities are at the very top, Atlantic City and Las Vegas. Why? Because gambling is recovering at this point, so late recovery. But then you also see superstar cities, Dallas and Orlando, always at the top of this list. We never see Flagstaff, Arizona, but it's there because it recovered late. We do see cities like Northport, Nashville. We see Austin, Atlanta. We don't see Blacksburg or Waco at the top of this list ever, so keep that in mind. There are two cities here that are very odd, and I want to warn you about them. They are Odessa, Texas, and Midland, Texas. These are oil cities. They're usually either at the top of this list or the bottom. So they are the most dangerous cities for real estate investment in the US. In my mind, unless you truly understand the oil market, stay away from these. But other markets that show up pretty often, San Diego shows up, Houston, San Francisco pretty often, though not as often as I would like, since I live here. The city that shows up the most often at the top is Provo, Utah. So most consistently, since I've been teaching this webinar for 7 years, this is the city that shows up the most often. But there's lots of other interesting cities in this list. One thing to remember is you want this number, see this number here, you want it to be above 4. So that'll take you almost halfway, well, maybe 40% of the way down the list. Do know that each month, as each month passes, the percentage of cities that are going to be above 4 is going to keep dropping and dropping and dropping. In normal times, we want this number, this 4% number that I'm showing you. Whoops, why does this change? This 4% number that I'm giving you to be above 2%. So in normal times, 2%. So each year when you come back to our website, you grab the new spreadsheet, you grab the new data, you'll notice this number is going to normalize. 2% job growth is really the holy grail. Because when there's 2% job growth in a particular city, there's a lot of bidding on real estate assets. 3% is even better. 4% is amazing. 5% is just rock star. And right now, there's dozens and dozens of five-star cities. That's simply because of that one-time COVID adjustment. But one thing I can tell you for sure, the cities at the top of this list are generally better than the cities at the bottom. Now you'll see occasionally you'll see, well, like Santa Fe in New Mexico is at the top of the city list. Is it an awesome city? The answer is no, because when you go through the other real focuses, Santa Fe is not going to do well, right? So you're going to reject it anyway because it doesn't pass the other four tests. It does for jobs simply because it's a late recovery city. And right now, late recovery cities look pretty darn good. So do cities that just have a lot of jobs, like, Austin, Texas is not in here because it recovered late from anything. It was the first city in America to recover all of the jobs lost to COVID. But it has a lot of jobs, so it's at the top of the list and probably will be at the top of the list 6 months from now, 12 months from now, and 18 months from now, because it's simply the most powerful economy on in the US for the next 10 years. So it's nice to see some interesting ones. So I'm going to kind of walk you through this list. And of course, you guys are going to ask me about 100 cities at the end of this webinar, which is in a few minutes. And so we'll talk about more of them, right? So Dallas, terrific city to invest in. This number is real. It has nothing to do with COVID. Dallas is seeing explosive job growth. Orlando's doing really, really well. A lot of people want to go see Mickey Mouse because they haven't seen Mickey Mouse for 2 years. So take a look at those. They're very strong. Athens is an interesting city. We've noticed it fairly recently, and we bid on a student housing asset there and lost last year. And I think it's a terrific city to look at. Atlanta is amazing, absolutely damn amazing. From time to time, I think it's going to go down, and it just stays up there in the list. So terrific city. Atlanta Metro is a terrific place to invest in. So is Austin, even though I showed you that home prices in Austin are falling. You might say, why, Neil, are you investing in Austin? The answer is when I look at all the real focuses, plus I look at my professional level spreadsheet, I just don't see anything like Austin. Its numbers are off the chart. So I'm just going to take that 5%, 7% dip. It's not really going to affect my rents as much because there's so many people moving into the city, and I'll be okay. Does that make sense? On the real focuses, Austin is going to crush just about any city in America. You just have to look at all five of them.
You
All
skipped
right.
over Nashville, Tennessee.
What's that?
In Nashville, Tennessee, you skipped right
Yep,
over it.
yep.
I know it's one of your
That's
favorite
another
ones to
one.
talk
It's
about
a
as
city
well.
it's a city that I like to criticize, but I must say this. I always think Nashville prices are about to fall. I thought that 3 or 4 months ago. I checked it last week. I'm still not seeing any evidence of prices falling. So Nashville, Tennessee, and Denver, Colorado tend to surprise me a great deal, but are definitely two strong cities to invest in. If I was investing in Tennessee, though, I'd probably invest in the secondary city of Knoxville, Knoxville, rather than Nashville, because Nashville is a little bit on the bubbly side. But these are good cities to invest in. For Californians, Riverside is a fantastic choice because people are running away from Los Angeles to Orange County and running away from Orange County towards Riverside. So you're going to see terrific growth there. Sacramento is one that I'm very careful about at this point in time. I think Sac has had an amazing run, a very profitable run. We were screaming about Sacramento in 2017 and people didn't listen to us. But at this point, watch out. I think Sac falls the most in California, even more than San Mateo. Let's see. Other interesting cities, Anna? You've got lots and lots of your favorites. Let's see. What else is in
Well, I
here?
think Lake
Cape
Charles
Coral.
is worth mentioning because it is one of those Odessa, it is one that could, fool some people.
Yes, yes. We find Lake Charles to be a very dangerous city, Lake Charles had a massive increase in investment because of LNG, or liquid natural gas. As you know, Russia is turning on off the pipelines, so all European cities are scrambling to build LNG terminals. The US's biggest LNG terminal happens to be in Lake Charles, so it saw a boom. But it's a one-trick pony. At this point, we're not sure if it can sustain its jobs because it's just a terminal. The jobs are there, but once it's completely developed and expanded, I think those jobs are going away. So it's kind of like Odessa and Midland. It's dangerous.
Yeah, but it
But
has more of a propensity for hurricanes as well. It's gotten hit
that's
very
right.
hard
Yeah,
twice in a row, whereas I
twice in
don't
a
think
row.
Odessa and Midland have that.
Yeah, it's been hit. Direct hits by hurricanes are actually more rare in the U.S. than most people believe. Cities will have hurricanes, but they're not direct hits. This city has had two direct hits, so not good at all. Well, a
Yeah.
city I like to talk about is Cape Coral and
And
also
we had
its
somebody
sister
asking
city.
about Cape Coral. So
There you go.
why don't you talk about that one?
So Cape Coral and Fort Myers are part of a corridor effect that starts in Tampa and then runs through Sarasota, Punta Gorda, Port Charlotte, and then goes down through Cape Coral, then Fort Myers, and then sort of ends in Naples. So that is a corridor. I think it's about 300-ish miles, maybe 250 miles long. That starts in Tampa and runs downwards, and that that is an absolutely explosive area. Um, Cape Coral is expensive, so maybe look in Punta Gorda, which is a little north of Cape Coral. Port Charlotte is even slightly cheaper than Punta Gorda. We're looking in Port Charlotte, so those are terrific markets to invest in. If there's one state that I would pick for this year, it's Florida. There's no doubt in my mind I'd pick Florida, but I'm not at all bullish on super expensive parts of Florida like Miami or Palm Beach. I think they've had a great run. I don't think that they're at a huge risk at this point. I see no evidence of price drops in Miami, but I do feel that they're a little bit risky, that they're just not as good as they were maybe a year and a half ago. All right.